Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoen, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Incorporated, a trusted mortgage brokerage dedicated to helping Canadians achieve their home ownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode. Today, we're discussing the recent developments regarding the Bank of Canada's decision to cut its overnight lending rate to 2.75%. This decision comes amid a tariff war between the United States and Canada. Steve, what are your thoughts on this rate cut?
Well, Janine, the Bank of Canada has cut the rate for the seventh straight time, reducing it by 25 basis points. This move is a response to the economic pressures caused by the tariff war, which has been impacting business and consumer confidence. Governor Tiff Macklem has warned that this could lead to a severe economic crisis, depending on how long these tariffs are in place and their extent.
It seems like a challenging situation, especially with the impact on household spending and business investments. The trade tensions are definitely weighing heavily on economic activity. I think this could affect everyday Canadians, particularly those in industries like manufacturing and mining, which are export-driven.
Absolutely, Janine. The tariff war has weakened consumer confidence and raised concerns about job losses in these industries. On top of that, the Canadian dollar has weakened, reducing the purchasing power of our industries. This could lead to higher prices and inflation, which the Bank of Canada is trying to manage carefully with their policy rate changes.
I think it is important to consider how this impacts mortgages and lending. With the overnight rate decreasing, homeowners renewing variable rate mortgages might see lower payment increases. However, fixed mortgage rates are tied to bond yields, which have been lowering as well. This could be a silver lining for some homeowners.
Yes, the competition among lenders can also help in keeping mortgage costs down for homeowners. Still, as Macklem pointed out, the ongoing trade tensions are restraining household spending intentions and business plans to hire and invest. We need to keep a close eye on how these factors develop and affect the broader economy.
It's true, Steve. While this rate cut might offer some relief, the full impact of the tariffs could take time to manifest in the economy. The higher costs and weaker demand could eventually affect the prices Canadians face, which is something we all need to prepare for. The Bank of Canada's decision to cut its overnight lending rate for the seventh consecutive time is certainly stirring up quite the conversation. Penelope Graham from ratehub.ca offers some insights into what this means for Canadians, especially in light of the ongoing tariff threats from the United States.
That is right, Janine. The Bank of Canada has lowered the rate by another 0.25%, bringing it down to 2.75%. This is a significant drop from when they started their rate-cutting cycle back in June 2024, with the prime rate at most Canadian lenders now sitting at 4.95%.
The main driver behind this decision seems to be the economic uncertainty caused by the U.S. tariff threats. Even though the tariffs have not yet been fully implemented, the mere threat has already started to impact our economy by preventing businesses from investing and hiring and dampening consumer spending.
Exactly, Janine. The Bank of Canada has acknowledged that while economic growth has been stronger than expected, the uncertainty surrounding these tariffs is holding back consumer spending and business investment. The central bank is trying to balance stimulating the economy while also managing inflation, which is close to their 2% target.
For Canadians with a mortgage, especially those with variable rate mortgages, this rate cut could mean lower payments. Variable mortgage rates are directly influenced by the Bank of Canada's decisions, so these borrowers may see immediate benefits.
That is a silver lining for borrowers. But we have to remember that fixed mortgage rates are tied more to bond yields. While bond yields have dropped recently, giving lenders room to lower fixed rates, they are still susceptible to market fluctuations, especially with the ongoing tariff saga.
It is a tough time for those looking to invest too. The stock market is reacting to the tariff drama with a lot of volatility, which is unsettling for investors. As CNN reports, there is a lot of extreme fear in the market right now, and some experts suggest moving towards more stable, passive income investments.
And for savers, these rate cuts mean lower returns on high-interest savings accounts and guaranteed investment certificates. It might be wise to lock in a good rate now before potential further cuts erode returns even more.
Overall, it is a complex situation, and Canadians need to stay informed and consider how these economic shifts affect their personal financial situations. Whether you are a borrower, investor, or saver, it is crucial to understand the broader impacts of these developments.
As we wrap up today's discussion, let's turn our attention to the housing market, which continues to face challenges despite the recent rate cut by the Bank of Canada.
That's right, Steve. While the decision to lower the overnight rate to 2.75% was expected, it's uncertain whether this move will stimulate the housing market. The ongoing trade tensions with the United States, particularly with tariffs on Canadian steel and aluminum, are adding to the economic uncertainties.
Economists like Stephen Brown from Capital Economics have pointed out that the recent positive surprises in gross domestic product and employment are overshadowed by the potential impact of these tariffs. There's a concern that they could be inflationary and hinder growth, making a case for lower rates in the long run.
And Jack Manley from JP Morgan Asset Management echoed similar sentiments, suggesting that while tariffs might drive inflation up, they also create an argument for reducing rates to support economic activity. But Steve, how does this rate cut translate for the housing market?
Traditionally, lower interest rates should reduce borrowing costs and potentially boost housing market activity. However, in this current environment, the effectiveness of the rate cut in reviving the housing sector is limited. Leah Zlatkin, a licensed mortgage broker, mentioned that while the rate cut is a positive step, it might not be enough to inspire confidence in home buyers this spring.
Leah did note, though, that if there are more aggressive rate cuts in the coming months, we might see renewed activity in the summer. The current 25 basis point reduction has already brought the prime rate at most lenders from 5.20% to 4.95%, which affects variable rate mortgages.
Yes, Janine. Variable rate mortgages are now available at discounts of prime minus 0.85% for insured mortgages and 0.75% for uninsured ones, bringing the lowest variable rates down to 4.10% and 4.20% respectively.
This translates to modest decreases in monthly mortgage payments across various regions. For example, in Toronto, the average home price was $1,084,547 in February 2025, resulting in a monthly payment decrease of about $71.
And in Vancouver, with a benchmark home price of $2,005,400 in January 2025, homeowners are seeing a monthly payment reduction of approximately $132. These reductions are based on a 15% down payment for homes under $1 million and 20% for homes above $1 million, with a 25-year amortization period.
Despite these reductions, the Canada Mortgage and Housing Corporation anticipates an uneven recovery across the country, with affordability issues and regional disparities continuing to pose challenges. Lower mortgage rates and changes to mortgage rules might improve market activity, but the economic headwinds remain strong.
It's a complex situation, Janine. As always, it's important for Canadians to stay informed and consider how these economic shifts affect their personal financial situations. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.